Hey guys, welcome back. I hope you had a really great day trading today. So today was Monday, August 26th, and markets opened cautiously optimistic this morning. And in SPY, we did open with a small gap up, and we pushed into that gap about halfway of what was left. And you can't really see it on this time frame, so let me drop to the 5-minute time frame right here. You could see that right at open right here, we gapped up and we got into that gap and we filled it about halfway. And then from there, we did get pushed back out. We dropped down to the 5-minute 200 moving average. And if you don't know, the 5-minute 200 moving average is almost exactly the same level as the 35 EMA on the 30-minute time frame. So we opened in this gap, got pushed out right away, dropped to the 35 EMA right here, saw a technical bounce on that level, and then we did drop underneath it, and then at close we popped right back up above the 35 EMA, but we still closed in the red. The bottom of the implied move today was 558. We did brush up against that. We didn't quite get all the way down. So today, if you did sell 558, 557 spreads when we were down here, those definitely paid out 100% because we did bounce right there and then we pulled right back up above the 35 EMA. And in SPX, we did see that same up gap to open, and you could see the wick right here, and the down gap here is a little bit bigger in SPX, so we did fill a little bit less than half of that gap before getting pushed out back down to the 35 EMA. We saw that small technical bounce there, then we dropped underneath the 35 EMA before getting pulled back up to close just above the 30-minute 35 EMA. And I'm going to take this out to the 1 hour time frame. It's a little bit easier to see this gap and where we are in reference to all-time highs. So we did make all-time highs back here in July. The day before that, we saw an up gap. Then the following day, we saw a down gap. So we did close out that bull gap last week. This was on Thursday. And then today, we did push up a little bit more into this bear gap. So this is clearly the battle zone that island tops are known for being. So SPY did close down 0.24%, SPX closed down 0.32%, VIX closed up 1.83, so we're in the 16s in volatility, and we did close completely within the implied move in both. So SPY, the bottom of the implied move here was 558, and we closed at 560.79. And SPX, the bottom of the implied move was 55.95, and we did close above that as well. And QQQ, we did open QQQ down today, and the Nasdaq was the biggest loser of the day today. We opened with a gap down, filled it, and dropped all the way down to the bottom of the implied move, which was at 475. You could see we closed at 475.34, so we didn't really bounce off that level. We just took it all the way down to the bottom of the implied move and traded sideways. The 50-day moving average was right there, and also this green line, 474, is a long-term support and resistance level. Let me zoom it out. This is the 1 hour time frame right here, and you could see 474 right here was a support, then a support right here when we gapped underneath that level, which is where we're trading. We're trading around where this gap is, or was, because we filled it. So we gapped underneath that level, we dropped, and when we came back up, that was resistance right here. Recently, we did get back above it here when we filled this gap, but we haven't gone very far from that 474 level. So still a very relevant level on our charts, and that 50-day moving average was right there as well. So bottom of the implied move was there, 474, pivot resistance and support level was there, and the 50-day moving average. And QQQ did close down 0.97%, VXN up 2.18%, and here we also did close within the implied move. The bottom of the implied move was 475. we closed 475.34. So if you did sell 475, 474 bull put spreads today, those did close at expiration up 100%. And IWM did open up, and we did stay elevated but within the implied move for the first hour, and then after that we did lose it. We did come down, close the morning gap. Once we closed the morning gap, we bounced back up, and we did trade sideways for the rest of the day. Remember yesterday I did mention that the 35 EMA on the 30-minute time frame was underneath the implied move. So it was under 217 at open. And I also mentioned that that often signals a down or flat day. And we did get a flat day today, up 0.03%. RVX up 3.35%. And we did stay completely within the implied move here. And lastly, DIA, we did open here with a gap up. And we did pop up to the first level of resistance. And I'm going to zoom out to the 1 hour time frame so we can see we traded between two key resistance levels today. So last week on Friday, we did have a big up day and we saw resistance right here at 412. Then today we gapped up. We took it to the next resistance right here at 414, and we stayed really between those two resistance levels. And today we did get just a little bit above that, but we did pull back. DIA did close green today, up 0.22%. We are seeing a bearish divergence in Stupid Willie right here, and this is the 1 hour time frame, so I'll switch back to the 30-minute time frame in just a second, but I'm going to switch over to RSI and see if it's there as well. Yes, so from last week, this is where we had that up gap right here when Jerome Powell spoke. When we hit that resistance, you could see we have a bearish divergence in RSI. So that means we did see higher highs in price, but lower lows in relative strength. And then that's the 1 hour time frame. Let me switch to the 30 minutes, see if we can see that here too. So it's not really quite as strong over here. And maybe tonight after all the videos are done, I'll look on the bigger time frames and see what RSI is saying. I don't look at RSI as much as I should, but because we're near all-time highs, I think it might be a really good time to do that. And that's enough about today. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post a new video. If you have any questions, make sure you leave me a comment. And if you want to support the growth of this channel, don't be afraid of that thank you button. It's a really easy way to show appreciation, especially if you took a great trade based on something you learned here. And if you can't do that, then sharing this channel also really helps. Alright, so starting in SPY, tomorrow's implied move is between 557 and 565, and that is from options. The 30-day average volatility is still much wider. It is between 550 and 571, and the implied move on Wednesday's contract is between 554 and 567. Don't forget that in after hours on Wednesday we do have NVIDIA earnings. And to the upside, the very first level to look for is going to be the remaining part of that gap. All of last week we've been pushing into it and getting rejected, pushing a little bit more, getting pushed back out, trying to get higher, trying to close this gap on our way to all-time highs, but you can also see that we've been losing strength. And the top of the implied move for tomorrow is 565. That lines up right with all-time highs. So be prepared for that possibly to be a resistance until we see what NVIDIA earnings bring. And then the top of the implied move, if we do get above that for Wednesday's contract, is 567. and that is the upside. Above that is all uncharted territory because we are just underneath all-time highs right now. And then to the downside, the first level to look for is this 35 EMA. Today you could see that the candles around the 35 EMA are gray. And the way I have my chart set up, it's blue, the candles are blue when we're above the 35 EMA. Right at the 35 EMA, they're gray, which is neutral, and underneath they're red. So today they were not bullish, they were not bearish, we were just sticking right to that 35 EMA. And that 35 EMA, you could see that ever since we bounced on the weekly 35 EMA right here, and then once we got back above the 35 EMA on the 30-minute time frame, that was a very clear support, and we stayed above that level until the first time we got underneath here. This was right before Jackson Hole, and then we gapped back up the next day to get above it, and then we have been seeing a little bit of resistance at that gap. But 35 EMA, very critical level in tomorrow's trading range, and it's going right through the middle. Momentum there is sideways. If we do break that, the bottom of the implied move is at 557. We also do have this support right here from right before Jackson Hole. That falls right between the implied move for the next 2 days. That is at, let's call it 555. It's a little bit above that, but 555. And then the bottom of the implied move on Wednesday's contract is 554. And underneath all of that, we do have the projected out 30-minute 200 moving average. That is actually still outside of our trading range for the next 2 days, but looking at it projected out momentum wise, it is down here in the bottom of Wednesday's trading range. And underneath all of that, we do have the consumer credit up gap. I think that was actually the consumer spending up gap right here, and the 50-day moving average. I don't have it extended out, but it should be right there underneath that as well. So for just tomorrow's implied move, we do have two gaps, the rest of this gap right here, and then this one right here from Jackson Hole. We're trading between two gaps tomorrow, and then we do have some support below if we do break that. So that is SPY. Taking it over to SPX, the implied move over here is between 55.85 and 56.50. That is from options, and the 30-day average volatility is quite a bit wider, and that is 55.10 and 57.20. The implied move on Wednesday's contract is between 55.75 and 56.60. Don't forget, we have NVIDIA earnings after market close on Wednesday. And I do think that this actually goes right there. I got a little carried away. And to the upside, we do have the rest of that down gap. And that is just off of all-time highs back in July, and for some reason I lost my dashed line over here, and let me go ahead and put that back in. I might have accidentally clicked off of it. So all-time highs are right here, just above the implied move for the next 2 days, and we do have the rest of that gap there as well. So as I've been saying for the past week, if there's any bears hanging out anywhere, they're going to be in this gap. And you've seen that every time we pushed in that gap, we've got hit back out. So between 56.50 and 56.70, look out for the bears. And then all-time highs, 56.69, 67, and then uncharted territory above that. To the downside, and it's actually right where we closed, is that 35 EMA. You can see the momentum has flattened out. So as far as which way it's facing, it's not going to give us too much tomorrow, but keep an eye on which way we do break and whether it acts as support or resistance. And then if we do break down, 55.85 is the bottom of the implied move for tomorrow's contract, 55.75 on Wednesday's contract, and we do have that up gap from Jackson Hole. That lines up right with the bottom of the implied move, and the bottom of that gap lines up with Wednesday. 30-minute 200 moving average projected out is underneath Wednesday's implied move, and the 50-day moving average is underneath the entire trading range there. So if we do drop, some support levels to look for. And then taking it over to QQQ. The implied move here for tomorrow is between 471 and 480, and that is from options. The 30-day average volatility, much wider still, 463 to 488. And I haven't been mentioning in SPY and SPX, a good practice that I've been doing lately is just to keep the midpoint between the implied move and the 30-day average volatility in mind. It looks like the midpoint here would be somewhere around 484, and that would line up with this resistance right here. And that is because we did just recently have a spike in volatility. And just because the implied move is small doesn't mean we can't see some bigger moves. And then the implied move on Wednesday's contract, 467 to 484, and you could see we had a pretty clear expansion there. The last couple days it was maybe $1 or $2 off, but we do have a $4 difference right here, and that is because aftermarket on Wednesday, NVIDIA earnings. So Wednesday's contract does have expanded volatility. And then to the upside, we do have the 35 EMA on the 30-minute time frame. So in SPY and SPX, we're right at that 35 EMA. In the Nasdaq, we are underneath it, and zooming out a little bit, you can see that 35 EMA played a crucial role as support as we did see that massive rally after we dropped. So last week we did drop underneath it right before Jackson Hole. Then we did see that Jackson Hole up gap right here, but we already closed that out and we have not been holding that. And the only thing that has been holding us up is the fact that we had the 50-day moving average right here and that support level. So 35 EMA, keep an eye on that first. 480 is the top of the implied move if we do happen to get above it. Wednesday's contract, 484, and that lines right up with where we saw resistance last Thursday before Jackson Hole. We did see that pop up and the drop to the 50-day moving average. And if we zoom out just a little bit more, we did see resistance right here at 484 as well in the last week of July. So then underneath us, the 50-day moving average is right here. It is a little bit hard to see, but you can see that it was support right here when we dropped. Today we're just a little bit above it. Then this green line is the pivot support and resistance that goes back, wrong time frame. And that goes back to right here. We saw support, then we dropped underneath it and dropped. And then when we came back up, resistance. Recently we got back above it and we are hanging out right there, right above that level. So another critical level to look for is 474. The bottom of the implied move for tomorrow is 471. And on Wednesday's contract, 467. We do have that 1 hour 200 moving average that I've been pointing out the fact that it's still facing down. And it absolutely does have the power to pull us down into this gap, the consumer spending gap, as long as it's facing down. And let me switch back to the 30-minute time frame here. We also have the 30-minute 200 moving average underneath that 1 hour. And just note that it is trading bearishly. The 30-minute time frame being underneath a bigger time frame is bearish, but it does look like it may cross up tomorrow. But it's also still bearish in relation to the 50-day moving average. And also just underneath all of that, the 4 hour 200 moving average. So you can see we have a lot of moving averages that could act as support if we do drop. So definitely an interesting trading range over here, a lot to look for. And I don't know if I mentioned the consumer spending gap is down here as well from 2 weeks ago after we had PPI and CPI, and then that consumer spending gap pushed us up. And then taking it over to IWM, the implied move over here is between 218 and 224, and that is from options. The 30-day average volatility, 214 to 227. And the implied move on Wednesday's contract, 217 to 225. And to the upside, the first level to look for is where we did see resistance today, 222.5. And then the top of the implied move is at 224, 225 on Wednesday's contract. And remember, we do have NVIDIA at the end of the day on Wednesday. IWM would probably have one of the least reactions to NVIDIA, but just be aware of that. And then let me zoom out just a little bit, take it to the 1 hour. I want to see if there's anything that I'm missing. So really above that, we don't have a whole lot of resistance, but I would keep an eye on about 225 right here. We do have a bit of resistance before we filled that gap right here, and then that long time gap right here was at 228, and that's just looking forward. If you are looking a little bit further out, we do have a bearish divergence in Stupid Willie here, so losing a little bit of strength. And then to the downside, we do have the 35 EMA. It is at the bottom of our implied move, not at the bottom, but going through the middle of the red side of the implied move. And let me just fix this up real fast. So 35 EMA underneath us. If we do break that, 218 is the bottom of the implied move on tomorrow's contract, 217 on Wednesday's contract. We do have the up gap from Jackson Hole at the bottom of the trading range, and then the 1 hour 200 moving average momentum is flat here, and it is going right through that gap too, but certainly looks like a buy level if we do drop to that on the day at least. And then DIA. This chart looks just a little bit different because we only have weekly options over here. So the implied move for the entire week is between 406 and 418, and then the implied move for tomorrow is between 407 to 419. And to the upside over here, the first level to look for is going to be 414. And 414, we did get a little bit above that level today, but it was a previous resistance right here, and that goes back to July 18th. After that, we did have a lower low before we dropped, and then just recently we did see that lower low as resistance, and then today that higher one was a resistance today. So today we actually did trade right between those two levels. So both of those levels really do need to be on your chart. So I'm going to say right here 412 and then 414. Above that, I don't think we have anything. If we break free of that, then we don't have anything as resistance until we get to the top of the implied move. That's on the weekly contract at 418. And then to the downside, let me switch back to the 30-minute time frame here, the 30-minute 35 EMA. We also have been seeing this as a very clear support ever since we bounced off of that drop on the 35 EMA right here on the weekly time frame. We got back above the 30-minute 35 EMA, and you could see it has caught us every time. Even right here, right before Jackson Hole, we did print a few red candles, but then we gapped back up, and now we're back above this 35 EMA. So that is right there in the middle of our trading range for tomorrow. If we do break it, the next level to look for is this Jackson Hole gap right here, and it is at the bottom of the implied move for tomorrow, and that is 407 to just under 409. And I don't know if you guys have been able to hear this thunderstorm in the background. It is so loud. So then underneath that, we do have right here 406 would be another support level to possibly look for if we do drop. And underneath all of that, we do have quite a few things that could act as support, and we have this up gap right here, and that goes back to, where does that go back to? What am I looking at? Okay, right here. So we do have this down gap right here and this up gap right here. And remember, island gaps do tend to pull price in. They do get closed out sooner than later. So do be aware of that if you are trading further out than the 0 DTE or Friday's contract. If you're looking further out, this is a level we probably will see again in the near future. And you could see it's been a level that we have returned to over and over since July. And personally, I don't think we're done with it. So there you have it, guys. I have rambled a lot and given you a lot of levels to see and know. And let me know if there's anything that I missed. Let me know if there's anything you don't understand. And have fun tomorrow. Trade safe. Make sure you take profits when you're out. And I'll see